What's up, crypto clan? What are you guys doing? Let's do an update. My traders, we know we talked about this earlier in the week. I'll teach you guys. This is one of the basic patterns. This is one of the first trading patterns I learned. I'll tell you, I learned it from William O'Neill, who started Investor Business Daily. He wrote a couple books early on. This is when his newsletter was really just getting going. I don't think he even had the website yet. But he would deliver. You'd get the paper, and that he had a whole. He used to teach some basing techniques, but one of them was called the cup and handle. Very simple idea. It's just a market that moves up. You have this consolidation. Sometimes it does look like a cup or a saucer. And what it does is you have a significant pullback from the high. It takes some time to digest. You revisit the high, and the first time up, you don't quite punch through. So here we go. Bitcoin makes a move up, pulls back. This was a pretty deep pullback where we were buyers. And then you had a bottoming tail. That's another technique. And then you revisited the high right here. And then what did you get? Sideways consolidation. You didn't retest the highs and then collapse. The market just caught its breath, took its time, and built the handle, they call it. So it looks like a cup. There's the handle. Pretty simple visual, right? And so I said that a couple days ago. It looks like a cup and handle to me. Wouldn't be surprised if we take it out, and that's exactly what you got today. So I like this bar. I like being bullish. I like adding to your Bitcoin positions or just letting them ride here for a while. There's some extensions you can do. There's some channels that you can draw that will give you an idea of where the upside is, but that's not really necessary, because just because you pick a target doesn't mean that you hold and don't sell on the way up and only wait for your target. That's foolish. Because you have to account for time. You got to account for how something gets to a certain area. If you grind up to it versus if you go vertical. Also, how long does it take you to get there? If tomorrow we go all the way up to, say, you draw a trend line from here to here, and you come up with 5,500 price target. Well, if tomorrow we go to 5,500 in one day, are you going to be not selling at 5,400 because that's your target? No. If you get somewhere in a hurry, you better be coming out of it as it goes vertical. Okay? It's different if it's this gradual climb. Then you have different time targets and different cycle targets. So the way something gets somewhere and the time it takes to get there matters. So that's the problem with setting a target, because it ignores those two concepts. And also, you can be overbought and be below the target. You can be at your target and just basing, ready to blast through to another level. So we don't use a whole lot of targets. The best way to kind of use a channel is a standard regression channel, and it doesn't look like Coinigy has it. I looked through here, and I don't really see anything that I like. So from here, all you need to know is, can we rally 3 to 4 or 5 days? Absolutely. The next obvious target is 5,000. That's the whole number. But we'll just leave it at that for now. And then I'll come back and take a look at some of the other tokens also.